Welcome to June 2025. Halfway through the decade and the economic landscape is, shall we say, perplexing? If you've tried to make sense of the US economy lately, trust me, you're not alone. Economists, analysts, and everyday folks are all scratching their heads. It's like watching a movie where the plot keeps changing with unexpected twists and turns at every corner. You think you figured it out, and then, bam! A new scene throws everything into question. The economy isn't booming, with champagne corks popping and celebrations in the streets, but it's definitely not crashing either, sending us into a spiral of recession. It's stuck in a weird limbo, shuffling sideways, almost as if it's trying to avoid stepping on any cracks. Key numbers, GDP, inflation, and jobs, the vital signs of our economic health, are sending mixed signals, creating a confusing picture that's hard to decipher. It's like trying to navigate a city with all the traffic lights blinking at once. Growth is slowing. The engine of our economy isn't revving as high as it used to. Inflation is still high, stubbornly refusing to come down to comfortable levels. And the job market is holding on, showing resilience in the face of these challenges, but with a lot of uncertainty beneath the surface. There's a sense of unease, a feeling that things could change quickly. It's a puzzle worth solving, a complex riddle that demands our attention, because it affects everything from your grocery bill, the everyday expenses that impact your wallet, to your job security, the foundation of your financial well-being. The big story for mid-2025? What's the headline that truly captures this moment? Adjustment. The economy is in a state of constant flux, trying to find its footing in a changing world. The economy is adapting to new government policies, navigating the complexities of legislative changes, global trade shifts, responding to the ever-evolving dynamics of international commerce, and lingering disruptions. The echoes of past crises continue to reverberate through the system. The Federal Reserve is trying to steer us towards stability, carefully adjusting monetary policy to achieve a delicate balance, but it's a delicate operation. One wrong move could have significant consequences. Over the next few sections, we'll break down why growth is sputtering, examining the factors that are holding us back, why prices are high, exploring the underlying causes of persistent inflation, and what's happening in the job market. We'll analyze the latest trends and provide insights into employment opportunities. We'll also check in with the experts, the seasoned professionals who dedicate their lives to understanding these complex issues, to see what they predict for the rest of the year. What do the forecasts suggest for the months ahead? Our goal: make sense of this economic mess. To cut through the noise and provide clarity amidst the confusion. Because understanding the economy shouldn't require a PhD, you don't need to be an academic to grasp the fundamentals, just a willingness to look at the facts. A commitment to informed decision-making based on reliable information. Let's dive in, let's get started on this journey of economic discovery. Let's dive into the heart of the matter and talk about GDP, America's economic report card. It's the broadest measure we have of the nation's economic activity, reflecting the total value of goods and services produced. Think of it as the ultimate scorecard for how well the country is doing financially. We use it to gauge whether the economy is expanding, contracting, or simply treading water. Right now the grade is a C-. This isn't failing, but it's certainly not something to celebrate. It indicates that while the economy is still functioning, it's not performing at its full potential. It suggests some underlying issues that need to be addressed to boost economic health. Growth is underwhelming after a few years of stronger numbers. We've seen a noticeable deceleration in economic expansion compared to the previous period. The pace of growth has slowed, signaling a potential shift in the economic landscape. This slowdown raises concerns about future economic prospects and the need for strategic interventions. Why the slowdown? What factors are contributing to this less-than-stellar performance? It's a mix of global trade shifts and new tariffs, impacting the flow of goods and services across borders. These changes have introduced complexities and uncertainties into the international trade arena, making it pricier for U.S. companies to buy and sell goods. Increased costs can affect competitiveness and profitability, potentially leading to reduced economic activity. Uncertainty about trade rules has made businesses cautious, leading them to adopt a wait-and-see approach, slowing investment and dragging down GDP. When businesses are hesitant to invest, it can have a ripple effect throughout the economy, hindering overall growth. Government spending priorities have also shifted, reflecting changing policy objectives and budgetary constraints, creating friction as some sectors lose funding and others gain. These shifts can lead to disruptions and adjustments within different segments of the economy. Think of it as a restaurant changing its menu overnight, a sudden and significant alteration in offerings. Chaos before things settle. It takes time to adjust to new routines and processes. The transition from high growth, high stimulus, a period of rapid expansion fueled by government intervention, to normal, was always going to be bumpy. The return to a more sustainable and balanced economic state is rarely smooth. The current GDP numbers are the clearest sign we're hitting those bumps. These figures serve as a stark reminder of the challenges we face in navigating the economic landscape. Everyone's feeling the jolt, from businesses to workers to consumers. And the big question is, how long will this rough patch last? Will it be a short-term setback or a more prolonged period of sluggish growth? The answer depends on how quickly and effectively businesses and policymakers can adapt to the new economic realities. For now, the economy is stuck in a holding pattern, awaiting a clear direction forward. The hope is that this is just a temporary adjustment, a brief period of recalibration before a return to stronger growth. But the uncertainty is real, and its impact is being felt across the board. Now let's talk inflation, the reason your money doesn't go as far as it used to. In June 2025, inflation is still stubbornly high, making everyday life more expensive. The main culprit? Supply and demand imbalances that haven't fully resolved. Global supply chains are still kinked, so goods are scarce and prices stay up. The Federal Reserve has tried to fight inflation by raising interest rates, hoping to cool spending. But turning the economy is slow, like steering a giant ship. The effects take time, and meanwhile your grocery bill keeps climbing. The Fed is walking a tightrope: raise rates too much, risk recession; do too little, inflation sticks around. For now, we're all stuck waiting for relief. Why is inflation so sticky? Three main culprits: energy, food, and tariffs. Energy prices, gas, electricity, natural gas, impact everything from shipping to heating your home. Global energy markets are volatile, and higher oil prices ripple through the economy. Food prices are up too, thanks to energy costs, unpredictable weather, and labor shortages. Tariffs, taxes on imports, make goods more expensive for everyone. Companies pass those costs on to consumers, fueling inflation. These factors are all tangled together, making it hard to break the cycle. High energy prices make food pricier, tariffs raise costs on everyday items. The result: inflation stays high, and the Fed keeps interest rates up. For most people, it just means the cost of living keeps rising. Untangling this knot is one of the year's biggest challenges. Now, some less bad news: the job market. The headline unemployment rate is low. Most people looking for work can find it. But dig deeper, and you see a split. Some industries are booming, others are struggling. Healthcare, construction, and skilled trades are desperate for workers. Tech and real estate, hit by high interest rates, are laying people off. This creates winners and losers, and the national numbers don't tell the whole story. The outlook? Continued low unemployment but uneven growth across sectors. Workers in strong industries feel secure, others are anxious about the future. The job market is stable, but it's a fragile stability. How long it lasts depends on how the economy adapts. So, where are the jobs? In a world of constant economic change, that's the million-dollar question. The answer isn't always straightforward, as different sectors experience vastly different realities. Healthcare leads the way. It's a sector that continues to demonstrate remarkable resilience and growth. This is driven by an aging population, increasing public health needs, and a constant, unwavering demand for medical services. The need for skilled healthcare professionals is only going to intensify in the coming years. Construction and skilled trades are booming, fueled by both public and private investments. This surge is thanks to large-scale infrastructure projects designed to modernize our cities and address critical housing needs across the country. The demand for skilled labor in these areas remains incredibly high. Leisure and hospitality are hiring, experiencing a resurgence as consumer confidence grows. This positive trend is largely attributed to people returning to travel, dining out, and seeking entertainment experiences after a period of restraint. But tech is struggling, facing headwinds after years of rapid expansion. High interest rates are putting pressure on growth, leading to layoffs and a renewed focus on operational efficiency within the tech sector. Real estate and parts of finance are also hurting, feeling the impact of broader economic uncertainties. These sectors are experiencing job losses tied directly to the increased cost of borrowing and a general slowdown in investment activity. The labor market is a patchwork, a complex mosaic of contrasting fortunes. While some sectors are struggling to hire fast enough to meet demand, others are actively shrinking their workforce. This divergence, this split in performance, is the defining feature of 2025. The economy isn't one single unified story, but rather a collection of many different narratives unfolding simultaneously. Each sector, each industry, has its own set of winners and losers, shaped by unique circumstances and challenges. For job seekers navigating this complex landscape, it's all about being in the right place, with the right skills, at the right time. For everyone else observing these trends, it's a stark reminder that the economy's fortunes are never evenly shared across the population. The economic landscape keeps shifting, demanding adaptability and a keen understanding of the forces at play. What's next? Ask 10 economists, get 11 answers. Most agree, expect more of the same. Slow growth, stubborn inflation, and a divided job market. No one's predicting a boom, but a deep recession seems unlikely too. The Federal Reserve is the wild card. Everyone's watching for when they'll cut interest rates. Move too soon, inflation could surge. Wait too long, growth could stall. Most forecasts say the Fed will hold steady for now, waiting for clearer signs. Looking to 2026, some hope for lower inflation and rate cuts, which could boost growth. Others worry about new risks, global conflicts, supply chain shocks, or inflation that won't quit. The soft landing scenario is possible, but far from guaranteed. The takeaway: uncertainty rules. The economy is balanced on a knife's edge. Be ready for surprises. Here we are, mid-2025, in the middle of a massive economic balancing act. On one side, slowing growth, high rates, and global uncertainty. On the other, a resilient job market and strong demand in key sectors. Inflation remains the central villain, keeping the Fed cautious. The job market is split. Some industries thrive, others struggle. Watch the key indicators: inflation, GDP, and job reports. The US economy is resilient but clearly strained. The path forward is uncertain and patience is required from all of us. The balancing act continues and we're all on the tightrope together. One thing's for sure, it's going to be an interesting walk.